Mark, you've been recommending gold for a while, but was that more of a defensive risk-off kind of play? Is that because of the dollar's weakness, or tell me why you like it and what you make of the fact that the greenback is sitting at these lows here?
Well, I like it, and so does every other wealth management investment bank on Wall Street. So there's a reason for that. It's actually multifaceted. One, you just saw this week there was 0% interest the Fed has in place right now. That's not necessarily like a great, a thing for the U.S. dollar and for our economy, that the Fed thinks that we have to remain at zero. Then you have both sides of the house, and whoever's going to be president is going to have to enact some type of fiscal stimulus. So there's a lot of spending. So with that being the backdrop, gold is, just a great hedge against any possible scenario. And also, unlike Rick, who just spoke, I don't think that everything's going to be good in 3 to 4 months. I think that's very wishful thinking, and so does a lot of other people. So that's another reason why the gold's going up. So with all those things at the backdrop, we're like neutral on the U.S. dollar and using gold as a hedge.
And Andres, we spoke to Bill Miller at the top of the hour, who is keen on gold, on Bitcoin, and the performance we've seen in a number of these metals is the flip side of the dollar's weakness. Andres, is the dollar going to keep weakening, and what do you think are the drivers of this move? Is it anything to worry about, or is it kind of a reflection of the more positive equity environment we've been in this week, like Rick was saying?
Yeah, so there's a couple of drivers for the dollar. One is interest rate differentials. The other one is inflation differentials, meaning our inflation versus the rest of the world. And then the last one is growth differentials. And with all the focus on the election, we missed the fact that we had a batch of PMI data come out earlier this week that showed that global growth ex-US is actually picking up at a much faster pace than the US. That tends to be negative for the dollar. Regardless of who's president or not, the dollar tends to actually react. There's a much stronger relationship with that growth differential. So I'm not surprised the dollar is weaker when growth outside of the U.S. Seems to be stronger.
Andres, what would your advice be to investors then in this environment? Does that mean that they should be, buying emerging markets here?
Well, first of all, I think everyone should have a diversified portfolio, and specifically to the comments on gold. We've ran statistical analysis. Gold is not a great inflation hedge. People think it is. It's not. There's no statistical significance there at all. What gold is great at is that it zigs when everything else is zagging. It is a diversifier for a portfolio. It is not a great inflation hedge. It's not even a great risk-off hedge. Right now we're risk-on and gold is doing well, right? So there's no almost like reason or rhyme to gold, which is why it's great to have a sliver of it in your portfolio, because it tends to actually diversify the overall portfolio. So I would say, look, if you want international exposure, I think you should always have some, because there are going to be years in which international does better than U.S. And like we've seen the last couple of years, U.S. does better than international.
Shepard Smith here. Thanks for watching CNBC on YouTube.